Hello and welcome back to The Note. Russian stocks are cheap. We've mentioned that more than once, but they're also cheap for a reason. Now, there's been quite a strong recovery over the last couple of months since the great sell-off that followed the Ukrainian crisis. Has that recovery been overdone, or do Russian stocks really offer value at present? With me now to help try to answer those questions is our Eastern Europe editor, Neil Buckley. Neil, thanks for joining me once more. Let's start by taking a look at the performance of Russia compared to the rest of the emerging markets. Obviously a very dramatic sell-off as the Ukrainian crisis started. What lies behind that almost equally impressive recovery that we start seeing from the month of May?
Well, we see the recovery from early mid-May quite clearly on this chart, which was the moment, I think, that investors began to believe that the threat of worse sanctions on Russia was receding. We saw a bit of a shift in Vladimir Putin's rhetoric towards Ukraine. Early in March, the upper house of the Russian parliament authorized the use of the army, of the Russian army in Ukraine. That's when you see the very big drop. But at this point in mid-May, Putin starts to distance himself from the rebels in eastern Ukraine, talk about recognizing Petro Poroshenko, the new Ukrainian president. And ever since then, really, we've seen a recovery back to the pre-crisis levels in the Russian market, I think largely on the belief that the sanctions threat has receded.
Okay, we'll return to whether that belief is correct, but let's take a look at how cheap Russian stocks are now. This is looking at the spread in the book value of the MSCI emerging markets and the MSCI Russian index. It shows that they're almost one whole multiple of book cheaper than the emerging markets as a whole. But it also shows that they're often very cheap. Why are they trading at this kind of a discount?
Well, investors have long had a lot of concerns about the quality of governance in Russia, about political risk in Russia, which means that Russia has tended to trade at a discount to emerging markets, as this chart shows. What we see, though, quite interestingly, is that Russia has only been cheaper on really one or two occasions previously in Vladimir Putin's presidency. This chart covers the entire period of his presidency and kind of pseudo-presidency when he was prime minister to Dmitry Medvedev.
Right.
It also shows that actually there wasn't enormous enthusiasm for Russia even before this crisis, that it was right through 2012, 2013, it was hovering at levels which are really pretty low even by Russian standards.
Okay, so they really are cheap, Russian stocks. How confident should we be that there really aren't going to be any extra sanctions, that there isn't going to be an intensification of the crisis in Ukraine? There is still fighting going on there, even if it's less in the headlines.
I think investors have got a bit overconfident about the receding risk of sanctions. The sanctions that we saw imposed before already had a bigger impact than you might have expected when they were first imposed. They looked fairly weak, but actually they made Western companies very cautious about dealing with Russia. But the situation right now is although it looks as though the Ukrainian military is turning the tables a bit in eastern Ukraine, there's a serious threat of bloodshed in the rebels' final holdouts of Lugansk and Donetsk. If there is serious bloodshed there, the pressure on Russia to intervene militarily in some way will be very strong. Pressure on Vladimir Putin personally to intervene and not allow a defeat of these pro-Russian rebels. And if that happens, the likelihood of some kind of worsening sanctions is definitely still there.
And therefore that would suggest these stocks could yet get cheaper still, even though they're obviously good value at the moment.
I think we're certainly not out of the woods, and though there may be fundamental reasons why Russia looks still very undervalued, I think you have to be fairly bold not to overlook the political risks. There may actually be better value in some other parts of Central and Eastern Europe, not so directly affected by what's going on in Ukraine.
Okay, Neil, thank you very much indeed. The moral of the story, as with many things in the rest of the world these days, is that yes, it might be cheap, but really you have to take a risk if if you want to get anything that looks like good value these days.